All right, so welcome back to our live stream today. We're going to be breaking down not only what's happening in the market around Bitcoin and also cryptocurrency, the stock market, a lot of that, but also what you should be or could be doing with some of your Bitcoin and or assets to kind of weather this storm. My name is Paul Barron. Welcome back to Tech Path. Today we'll dive into a couple of analysis on how, well, I should say how I'm doing some strategies in terms, especially in these down markets, because it does represent an opportunity to go out and either buy the dip and also start to look at new strategies or additional strategies on how to secure some of your digital assets for the future. And we're going to dive into that a little bit more, get into all that cool stuff. I want to cover a couple of things on the market right now. And one thing I want to get to, and that is this Bitcoin sell-off right here. And this is a piece by CoinDesk, basically talking around how and how far this could go on Bitcoin currently. Sell-off deepens below 40K, minor support nearby. This is really around the 37K. This was an element that we brought up about a week ago when we were running our sentiment data on Bitcoin, and we did see a dip in our analysis for the CPI that had dropped down to 37. We thought that it had cleared that. Obviously, this was the point that that was kind of pointing to. But this article pointing to a $37,000 could stabilize the current sell-off, although a 30K is a more significant level to watch given the decline in the long-term momentum. I still believe that we are probably going to see some lower rates here. The question is, how far, and there are a lot of indicators that are pushing toward obviously what happened in the stock market, what we've seen in terms of a correction. But at the same time, all of this really pointing at the Fed in terms of what we thought was a little bit of priced in and normalized fear of where the stock market was going to be going as we started to see interest rates starting to make their move this year. And I think that, along with some other things, are starting to really pour in. My question is, how long will it be before we start to see the shift from traditional markets like stocks, bonds, et cetera, where people do come to their reality and say, you know, listen, cryptocurrency might be the model here for us to move forward on. When you look at what was hit the hardest, layer 1 and DeFi tokens among the hardest hit in this current crash, obviously what we've seen, and I'm sure all of you guys have seen, is around anywhere between a 15 and 20% adjustment and correction, along with what we've seen in the stock market. So this has been kind of cutting on both sides of the sword, so to speak, in traditional markets and obviously here in the crypto and digital asset market. I think the big question here is going to be, where is everybody putting their cash? Is it something they're doing right now to alleviate what's happening? Are they putting this into stablecoins from the crypto side of the stage, or are they putting it into liquid assets or bonds on the traditional financial sides of the market? And I think a lot of traders and a lot of investors are now starting to weigh out some of those potentials should we continue to see this kind of correction moving forward. And again, there's a couple of strategies that I use around this when down markets are happening. It does trigger something for me, and that is an approach I take around using my crypto for loans. And I know that sounds crazy. Why are you taking loans out on your crypto, Paul? That's crazy. The opportunity is when you're buying these new bags, whether you buy it at 37 or maybe you bought a bag here at 38, and you want to try to, if you believe that Bitcoin is going to be going up, which I truly do believe in 2022, we'll continue to see a higher close for 2022. And because of that conviction, what you're doing essentially is starting to build and compound your wealth at the same time in which you're growing on a loaned value. And I'll explain this all in a breakout. I'm going to show you in some slides here quickly. Before we kind of get into that, I want to cover a couple of little tweets here that were hit. This one right here was kind of interesting from Dan Tapiro. Massive generational wealth transfer is beginning. And this is interesting to me because when I look at institutions and traditional investors or portfolios compared to what I'm seeing happening within the millennial portfolios, and you can kind of see the chart here, fiat would devalues versus the DAE. And then, of course, you look at traditional bonds and stocks. But if you look at the portfolio of millennials, stocks and Bitcoin, quickly starting to push in on a controlling interest of the millennial portfolios, which I think will be the bigger investors as we start to see crypto and digital currencies continue to evolve, meaning more adoption, more acquisition, and continued interest in the digital space. So this is here to stay. What you guys are experiencing right now are normal market corrections. Now, we have not seen a market correction like this in the stock exchange and in the Dow for quite some time, 5% on the S&P 500. But it has broken through, and I think that was one of the big characteristics that caused so much of the sell-off here. And again, this is happening a lot from the retail traders more so than anything. And there's a lot happening around this. There's a couple other elements here. This was something that I thought was interesting from Ninja, from BTC Ninja. Buying the dip, are you? He's going in at 38.5, which I did as well. And his question was, will it hold in the 39.5 upper? We are seeing this around 38 right now. It is breaking support. So he was basically kind of going through and repeating what we had been indicating around the 37 mark as being maybe the new floor of where this is going. If you look at what Will Clemente has been holding on, this is an interesting one because it all comes down to the week's close is basically what BTC Ninja was talking about. And he's going back in on very simple, closing below 39.5, expect 30 to 32. And then if we close above 39.5, expect to move the upside. That's going to be the question mark here that we'll see over the weekend start to develop, is whether or not Bitcoin can start to see some recovery points here for sure. And of course, all of this has been what's causing it. U.S. stocks, this is of course people saying, hey, U.S. stocks can rally 10% this year, even though inflation is cooling and we are starting to see the potential. And that's the big key here, because if you have inflation starting to cool and the Fed is actually doing what they're designed to do, which is to make sure we don't get an overheated economy and at the same time we don't kill the economy. So it's a very delicate balancing act the Fed is trying to do, especially around inflation and what we're dealing with right now. And inflation has been on the upside, so it is going to be an interesting balancing act to watch. But a lot of analysts, deep analysts, are really starting to look still at, and this one right here, U.S. stocks can still rally 10% despite the recent volatility. BlackRock, Rick Ryder is basically talking about this. Now, what that tells me is that the major institutions are still very bullish on where the market is going to be. All that I think digital currency and in general cryptocurrencies need is a stability that starts to continue to support economic growth. And as long as we don't see a massive move from the Fed on interest or continued considerations, I think right now they're probably already starting to walk that back. And again, this is probably going to cause it to even be a little bit more sequestered in the sense of Jerome Powell saying, listen, we just had what is the biggest correction that we've seen in the exchange for quite some time. So I wonder how this is going to start to affect the Fed's decisions as they start to continue to see this. I still believe this, again, is a trickle-down effect toward what we're seeing here in Bitcoin. And of course, that drives the market across. But it does say something to me, and that is that we are continuing to see the effect of Bitcoin causing most of the rest of the market to still move in unison. So it still means no matter how far, and we've talked about this quite at length here on this channel, is Bitcoin separating from some of the other categories. I still believe Play to Earn, Metaverse, some of those projects will start to separate from Bitcoin. Whether or not we will see ETH or some of the major altcoins truly separate this year is a bit questionable, especially based on the current status of things. Obviously, all of this is going to be built into what's happening in the area of the Fed, interest rates, and inflation, all that kind of going. So the question you have is, how do I continue to make money in these down markets? That's what we're going to try to explain today. One thing, though, I want to remind everyone, we have the Diamond Circle. The Diamond Circle is where we're dropping a lot of analysis on projects, but also we'll do guides and also courses. And we have one that we just released that's available to you now that is a new cryptocurrency tax guide. So this is a full tax guide designed to help you for planning and prep on your gains that you took last year or your positions that you're in that last year and getting ready. So you can go in there, just click the link in the description. You'll be able to get $5 off because you're a Diamond Circle member. You just join if you're not. Additionally, within this guide, you're going to get a full-blown CPA analysis that we did. It's an hour-long Q&A that really goes into a lot of the questions that you're probably going to be asking your own CPA or financial advisor. Now remember, this is not financial advice. This is a guide to hopefully get you guys going on the right kinds of questions that you need to be asking your CPA. And in addition, we'll have a bonus video in there that's talking about how to deal with NFTs, MetaMask transactions, some of those things, because I know a lot of you guys are doing a ton of transactions outside traditional exchanges, and many of those kinds of scenarios require some custom work on getting ready for your taxes. We have a lot more coming to as well when you look at the Diamond Circle. And I want to come and get to that. Before we go to it though, let's pull up our poll real quick because I know we have one coming up here. And there you go. All right, so what's your current Bitcoin average price? 50 to 60K, about 19%, 40 to 49, 29, and then 30 to 39 at 32%, 0 to 29 at 20%. So we got some OGs in the house. 52% of you are below 39, so that's a good position to be in. Continue now, 53% below 39. So that's a good position, I think, for you guys to be in. And like for me, this is a hold situation. I'm not selling Bitcoin. In fact, I'm looking at new ways to do acquisition. I've been buying the dip all the way down. Bought at a 41.7, I believe. Then I came back in and bought a 38 some bag, and I'll continue to look for opportunities in buying that dip and an opportunity of really kind of go into that next level of where Bitcoin can be. Just as a reminder, when you go into the website, you'll be able to just, and this is something that is quickly for everybody that maybe you've joined already, is just hit join or log in. If you're going into the login right here, if you've already been a member or signed up, just hit that login button and it'll take you right to the login page. And within that, you'll be able to get into the store, which essentially is where you'll be able to buy one of these projects. So you get free access over here on the Diamond Circle, but this right here is a bundle program that you can get to. So that's how you get to it, pretty simple. The crypto index is again where we're doing a lot of our data analysis. And this, of course, is the CPI. This is what we use on an ongoing basis. So what we're going to break into today is a little bit around a tool that I use called Celsius. Now, Celsius, many of you have probably seen Alex Mashinsky on our show before. He's been on our channel a couple of times. I would check out Celsius, but more importantly, check out his interview because he talks a lot about what their strategies are and really what they're trying to do as a company. Now, one thing that they do, and I just want to show their website quickly, is essentially this is if you're an individual. There are some tools here for businesses as well, but individual, you can do a lot of earning yield captures here and also borrowing. They also have a credit card on their wait list. There's some opportunity coming in their swap and even some other tools around payments in crypto. So what I do with Celsius is I look at parking a certain amount of Bitcoin over on Celsius, and you can earn interest on that Bitcoin, or you can take a loan against that Bitcoin. Now, what I've done here is I'm going to show you guys a chart real quick of something that I have done around utilizing just a $10,000 Bitcoin bag. So, and I know that may sound like a lot. Let's move that. You can move this in upwards directions for the whales in the audience to go to 100K, down in the direction for $1,000, whatever it might be. But what you will see here on this slide is really just, I'm basing it on 10K. We're looking at basically our $2,500 loan amount. We're going to take this in USDC, and the collateral is Bitcoin. So I'm going to get a 1% interest rate on this. Now you're saying, well, why take a loan out on your Bitcoin? The whole point about this is it gives you additional funds to work with to add to your Bitcoin bag. Now you can do that a couple of different ways. You can, remember, you're getting $2,500 on your 10K, so 25%, but you're only paying 1% in interest. So fees are very low. Just as a reminder right there, on the purple side, right there, monthly interest around $2.08. My total interest for the year, 25 bucks, okay? And if I've got a $25 loan for 2,500 bucks, I mean, that's just cheap money that I can take that cash and move it either right back into Bitcoin, or I could do some other things. I could take it into USDC and earn 10%. I could take it right back into Bitcoin and also earn money on that very Bitcoin that I just took a loan on. So there's a lot of different angles to go with. What I've done is I've laid out a model here for you guys to kind of take a look at. So this is the loan to earn model. Both of these are good. I'm not saying that one's better than the other. It's just both are different in terms of strategies. You're going to earn a little bit more on the loan model than you would on the earn model. And it's slight, but it is enough there to maybe draw attention to it, especially if you do this over time. So again, on the loan model, we took $10,000 in Bitcoin in terms of our value. We took a $2,500 loan, which is a 1% loan for 1 year. And that's based on my LTV of 25%. My cost of loan is $2,500 in principal. Now what we've done here is we've calculated an assumption of Bitcoin going from 40K to 50K. So let's assume the market's going to go ahead and correct, and we're going to say Bitcoin is at 50K when we decide to maybe do an exit, all right? If that occurs, then my value increase is now based on my $12,500. Remember, I'm adding in the $10,000 and the $2,500 to get to that. So my $3,125 value increase is based on a 25% increase from 40 to 50K. That's going to give me my total end of year value, that's including the loan that I've already put in it, around $15,625. Now, I've got $15,600 in Bitcoin, but I've got to pay that loan back, so I'm going to spend my $2,500, and remember my 25 bucks that I had to pay for interest. I put that, or take that out of the total, and then I'm putting in an interest gain on the $2,500 loan, because remember, I took $2,500 out that I can do whatever I want with. I can go buy USDC, I can go buy Bitcoin. In this particular case, I went out and bought Bitcoin, and I'm going to park that Bitcoin back in Celsius, except on that 2,500 bucks, I'm going to earn 6.2% interest. So there's 155 bucks on my interest gain that I package in for my loan. And at the end of the year, I've got a net value of 13,255 bucks on my $10,000 investment. Now, if I'd have just done this with a 25% gain, I'd be at 12.5. Okay, so almost 800 bucks on the upside just by doing this and making my money work for me. So you can imagine what this does when you start to accelerate this up the chart. So a lot of people are setting on cash. Maybe that they're saying, hey, I can earn this in either USDC, which I can park. And back to the slide, the earn model is the more conservative model. It's where you either hold your BTC and you're just going to earn your 5% APR on your Bitcoin, and you're going to gain your annual compounded interest rate of $511. You're going to get your increase in that, and your end of year value will be around 13,011 bucks. That's the basic model. There is one other thing you can do, and that is take, if you don't own the, now this of course is if you own Bitcoin right now, because you don't want to sell it when the markets are red. So this is a way for you to continue to earn money no matter what position the Bitcoin is in at any given point, because you're essentially putting it up for them to work with, because meaning Celsius is going to work with this to go out and help make that money for you. So there's a couple of options here that you can go with. And again, there's a lot of different tool sets out there. Voyager is a great one if you're utilizing that. Crypto.com is another one we talk about all the time that has a good value base in terms of interest based on USDC, and then all the different tokens that you might be sitting, including ETH. ETH is the same model. So if you own a big bag of ETH, you can go right over here, and I just want to show the Celsius website. I will just show you this earn right here. So I'm looking at my percentages right here. If I was parking Bitcoin, if I was putting my Bitcoin over on Celsius right now, up to the first 0.25 Bitcoin, I'm getting 6.2% interest. After that, I'm getting 3% interest, 3.05 on all other Bitcoin that's in there. That's a big advantage if I am going into what some of the people that are in the audience. If you're an accredited investor, now you can start to move up the layer a little bit more in terms of interest. But you can also do this with any different project. So let's say you wanted to do this with maybe ETH. And we'll take a look at ETH because I'm not sure what they're paying on ETH right now. So let's take a look. USDT. So ETH is around 6 if you're in the accredited, but you can still get the 5.35% on ETH. And again, because Ethereum is under 3K right now, a lot of people are saying, listen, I'm not going to sell it. I'm waiting for that adjustment, that market correction, and that might be the opportunity for me to jump into that. So this is where you're starting to park the dollars that you have or the value that you have in mechanisms that are automatically earning you APR throughout the year. There's a lot of different ways to do this. My concern, again, with most of the market out there is this is not the time to sell. But the question is, even though I'm not selling, how can I put those assets to work? Waiting for that market correction to go back and continue to grow my asset, and I'm gaining interest on both angles, whether I do it on the parking Bitcoin or if I go the route of loaning my Bitcoin against it. So lots of options here for you guys to use, and you don't have to just sit back and let your Bitcoin sit there and do nothing. Here is an opportunity that you can really put it out there and leverage it and earn a little bit of interest on Bitcoin as you go forward. Now, one thing that I always kind of look at when because there's many people in the audience, and I've had this question come to me quite a bit in terms of, Paul, are you taking cash, which is with inflation causing downward movement in my own bank account? What are you doing with that cash? If it's liquid cash that you need for regular everyday stuff, what I do with mine is I'll go the route of parking it either in USDC, which I can gain usually anywhere between 8 and 10%, depending on the platform you use. The ones that I have used in the past, Crypto.com has a great program. They do require you to park it or kind of stake it for a little while. And then you have projects like Voyager out there that also give you that ability. Usually with Voyager, it's paid monthly. I think Crypto.com pays it daily. So there's a lot of benefits for you of parking excess cash that's not earning anything over in your savings account into what we're seeing in cryptocurrency. And it's also back to that tweet that I showed you guys a little bit earlier, is this whole issue right here of these shifting portfolios that are happening right now before our very eyes. And as markets are down, smart investors and you know who, the rich getting richer, are watching this market play out in front of them, and they are making their moves as we speak, starting to go into and grab these kinds of assets and then working this money in all these different mechanisms, because these kinds of mechanisms are just financial tools that you continue to develop on. Now, point in on all these is market movers are really straightforward. They're easy. We try to present to you guys a bunch of research, our own analysis on what we're doing here in-house within our own investing strategy. And maybe it makes sense for you in terms of research, going out and trying projects, things like that, maybe looking into some of these programs. Again, not investment advice, but the key is it hopefully opens up your eyes on the education front of where you should be going. So good stuff right there. We're going to get to some of the questions because I know you guys have a bunch, and we'll try to take a look at a lot of these and hopefully give you guys some answers, because I think a lot of people are still maybe not as concerned, even though it is has been a big correction. I don't know that I've seen as much concern in the market. And of course, everything's down right now. But the concern, I think we're getting to the point now where we have seasoned investors. And unfortunately, I feel like this has been shaking out a lot of the retail hands, which is really kind of caused Bitcoin to flounder a bit. I think it will take some investments from some of the bigger institutions, and this is their potential entry point right here, which could cause these massive moves and these run-ups that just come out of nowhere. So just be on the lookout for those. All right, let's take a look at Irvin McCoy. Will these interest rates go up if Fed raises rates, or are they not tied to the Fed? That's a really good question, and this is something I asked Alex. They're not necessarily tied to the Fed like traditional loans are. So I don't anticipate what we'll see over on Celsius moving much, because remember, they're tied to the capital markets inside of crypto, because they're utilizing crypto to essentially earn on crypto. Mainly how they make money is they're going out in DeFi and utilizing the funds that you've parked. Remember, you transferred your asset for them. You still have the asset, it's still yours, but they can take and liquidate that if the asset falls below a certain amount. But remember, it has to fall a long way because you're only securing against 25%. So good question there. Let's go on to No Name. ETH, the best alt to buy historically. At the price rate that ETH is at right now, very interesting right now. That's a good one. Thank you, Kareen. Nexo gives you 8%. I think there are some variables with Nexo. And the only reason I didn't look at Nexo, one of the things that kind of concerned me was they had a very interesting statement on their front page, which was 0 to 1.9% interest in any two range. I don't like ranges because it usually doesn't give me a solid answer. And we've had, I can't remember his name, the CEO of Nexo, I think it was Alec or Alex, I'm not sure. But we've had Nexo on the show before. We should probably invite them back because I'd love to see. Nexo and Celsius both are very good competing products. Check out both of them. We just happened to use Celsius because it was an industry. This is a good one, Cavito. Keep in mind if you live in New York, unfortunately Celsius does not work. That is true, but if you live in California, you have a 0% interest rate. So there are benefits in different areas and around the world, but always you should check your own local situation. Bobby Coons, are you still bullish on Bitcoin? Is it time to go shopping? I'm still waiting in the wings, but I am watching very, very closely, Bobby, because this is an opportunity. I think these are the kind of times in which people really start to position for their future wealth, is in these opportunities. So it's going to be interesting to continue to see this. All right, let's go to Ankit. Axie and Illuvium around 67% down at all-time high. Are they a good buy? Yes, definitely. Axie, we've got guys right now that are acquiring Axie, but would I go out and buy it right now? I would probably hold, wait for the market stability to establish, and at that point, it's going to take some time for movement. But at that point, I would feel more comfortable for me to go out and grab those. But those are two projects that I definitely like, Axie and Illuvium, very much so. Ismaje, how much of a dip do we expect this time? There's an analysis on Bitcoin touching 35K. Yes, there is. So we had our analysis that we did 10 days ago when we were forecasting was around 37 was our low. Could it go there? Sure, yeah, we've dipped into that 37 if you look at some of the deep wicks on, but CoinMarketCap, of course, had it around 38.1, which is where it's bottomed out, then corrected a little bit. We've continued to see this waffle back and forth. Could it go below that? Sure, absolutely. We continue to see this pressure, and again, lots of pressure coming in from other influential factors, and that is meaning traditional stock markets, etc. All right, Matt Sutton, is sand in your price target to buy here? Yes. Okay, sand. Let's take a look at where sand is today, and in the meantime, I will pull up a quick review because I think the key issue with a lot of these, and this is a good question because what you have to look at is the right timing for many of these projects. And of course, Sandbox, let's go to the 3-month right there. So you can kind of see that they're right there at the 350 mark right now. But if you look back, it had hit 390, but it's right here is what I feel is its floor around 260. That's its potential for me. I'm looking for a little bit more of a slide on Sandbox before I go back in. Remember, Sandbox hitting its all-time high back here on Meta weekend. I think this is its real comfortable point, and that's somewhere in the $6 to $7 range, $6.50 to $7 range. So buying on the dip is never a bad thing if you are convicted in a project that you love. If it's the way I am about certain projects, it's dollar cost averaging for me. But everybody's different. Just be careful out there on some of these. All right, Crypto Gen X, get the loan from Celsius, buy Terra. I like that. That's a good play. Terra UST into Anchor and gain 20%. We were just talking about this the other day on in the crypto pit. So nice move. That's a good end around on utilizing those assets to leverage into other assets in which you can go out and do DeFi. Now you're getting much more complicated, but also much more sophisticated in earning money on money, which is how the rich people do it, guys. This is how the rich people. If you've ever read the book Rich Dad Poor Dad, Robert Kiyosaki, go read that, because this essentially is the model that he has used and coaches on year round. Is Render still a good buy for the long term? I still like Render. It's still a project that I hold, and people are always hitting on me that saying, hey, sell that Render, but I'm not going to. I feel like there's just so much there in terms of what the metaverse is going to do. Yeah, okay. Boomers are all about BTC and millennials are all about gaming. I would say not necessarily. I would say that boomers like Bitcoin because it has a little bit more stability, and gaming is an opportunity for really researching projects that are very high risk but also high reward. If you're a boomer, in most cases, you're probably looking at a different investment strategy. So, I'm a Gen Xer. I look at kind of the strategy in the middle of the road. I'm looking at risk and also stability. But I have a lot of friends of mine that are boomers, and they have a lot of money, and they will always look at moderate risk to zero risk. So they're always looking for the safe way out. Then you have a few boomers who are the more aggressive ones. Those are the ones that are trying to create legacy wealth. Those are the ones that usually will have an allocation of maybe 20, 30, 40% that they'll put into high risk because they're ready to try to create legacy level wealth, meaning something they can leave to their families that's going to take care of generations. Those are the kind of things and moves that you see a lot back into what we're seeing around play to earn gaming, because I know a lot of boomers within my circle that are starting to look at play to earn, and it's pretty interesting because there's a lot of questions coming up around those high risk projects. When will Bitcoin reach 100K? Is it still possible in 2022? I think a lot of people are still looking at Bitcoin as the core asset you have to when you look at market corrections like this. With the core alpha asset in the category, I do believe if this is not the bear market, we will see Bitcoin continue its move. I think there's just too many bullish signs for this in the direction. We've talked about this a lot on where the bullish market signs are pointing. Difference, interest rates, Fed, stock market. Those three things are very critical on the rest of capital markets. Even to a certain extent, some of the extended markets like real estate, beyond. And then you get into bonds, and I think that's when we start to see a little bit of the shakeout. But I do think that the Fed has to really walk it back and kind of control the falling knife, because this is a factor that could cause a problem in going from what we had in terms of inflation to a complete recession. And that's a big concern of a lot of analysts right now. A recession, big difference, because a recession starts to reset the model of how monetary assets are looked at across all things. So if you go back and study history, my friend Mark Moss, he's a guy that is pretty crazy on this stuff. He dives into a lot of this monetary gain and theory of how recessions, capital markets, and even the reserve dollar is looked at into the future if we start to see some of these things happen. You should check out his YouTube channel, but Mark Moss. Anyway, last question here. Do you feel the metaverse gaming will depend from Bitcoin this year and go their own way? I think decouple, yes. I do believe that. I do think that because of the moves we've seen with the major companies, Meta and Microsoft, we will see more and more of these starting to play into it. And with Microsoft and their acquisition of Blizzard, there's just too much in the space right now. It's undeniable. It's going to happen. And when that occurs, it's less and less dependent on what is happening in the traditional crypto market. When I say the traditional crypto markets, meaning the top tier, top 100 tokens out there, including Bitcoin, Ethereum, et cetera, and all the layer ones. So I do think it will decouple, and I do believe that that market is one of those, crypto gaming, play to earn, and also metaverse, because of its tie to e-commerce and what we'll see in terms of Web3 economies being built, is going to be a completely different animal when it comes to, now it's still part of crypto because it's using blockchain, but in reality, in many cases, a lot of these game assets are not even trading a token. In many cases, they're only working with game economies. So a lot of different plays there. Doesn't have near as much impact, and I do think that's why we'll see it decouple. All right, you guys are listening in over on the podcast right now. Best thing to do is jump over here to the YouTube channel. It's where you're going to get a chance to see all this stuff, all of our analysis, some of our charts. dive into the Diamond Circle. We do giveaways, and we also do a ton of drops within the Diamond Circle in terms of information, project analysis, a lot of deep dives, and also our own CPI, which is the Crypto Power Index. You can only find that here on the YouTube channel. Hit the subscribe button, make sure and like the video, and that will help you get more information as we start to continue our coverage and really dive in deeper as we continue to see this market kind of adjust here in the coming weeks and months. So it's going to be interesting to watch for sure. All right, you guys want to reach me? It's out on Twitter. It's @Paul Barron. We'll catch you next time right here on TechPath.